Canada and many other countries are at risk of a major banking crisis due to the level of household debt, due to the housing market. So let's get right into this and see what's going on. Canada among countries most at risk of housing crash spiraling into a bigger crisis, says these economists. Well, we already know that they're not from Canada because they're assuming it's a crash, and nobody in Canada has even said crash apart from me. And one thing I want to go over is this chart. It puts it into perspective of how big the bubble really is in Canada, looking at household debt to income, just how out of control it's got. So Canada is number 4 in the world in terms of household debt to income. So that is not a good thing to have. And what is all that debt built upon? It's built upon the housing market, which is a Ponzi scheme essentially, which is now crashing. So that is not a good thing because all this debt is built on the housing market and it cannot last forever. And I don't think a lot of people understand that. The steep decline of housing markets, not just in Canada, but in advanced economies around the world, is starting to raise red flags among economists. Oxford Economics, in a recent report, warns that the global risks of housing market crashes spiraling into banking crises are now much higher than historic norms. So that is not a good sign, is it? And they use a lot of different metrics to measure this, and Oxford Economics has been warning of the Canadian housing market for years. And a lot of people would say, well, they've been warning for years, Luke, so they've been wrong for so long. No, they've been early for so long. That's the thing. You can always be early, but that doesn't necessarily mean that you are wrong. When you're talking about like a Ponzi financial system like many of these Western countries have, like Australia, New Zealand, the United States, the UK, many European countries, and Canada, it's just a disaster waiting to happen. And the places that will suffer the worst when this happens are the ones with the most debt. And as we know from this list, Canada stacks very high on the list, number 4. Using a banking sector risk tool that measures 35 macroeconomic financial indicators, Oxford suggests that up to 16% of major economies have an 18 to 20% chance of suffering a housing crisis within the next 3 to 5 years, compared to a historic average of just 2%. Canada, along with Iceland, the Netherlands, Sweden, and Denmark, are among the 5 most vulnerable, with a 7% probability of this leading to a banking crisis within the next year, and 18 to 20% chance in 3 to 5 years. And you know, the BLS put out a report about 3 years ago, and Canada was tripping all of their indicators for a banking crisis, and they put the probability of around 50%. But then when you add the yield curve into the equation as well, it just doesn't look good, does it? And maybe that is what the yield curve is actually trying to tell us. So then it stacks it up just so you can see visually where Canada is. So Canada is right up there, one of the top, actually second. So that is not a good thing. And it says Canada's housing market, after years of overheating, is already in crash territory, having risen by 47% between March 2020 and March 2022. Real house prices fell for 9 months in a row up to December and were 19% down from their peak in Q1 2022, said the report. Historically, such sharp falls in property prices have been a precursor to housing and a wider banking crisis, it says. And we know why that is. It's because it's always linked to debt. These asset bubbles are always linked to debt. They're not built on any wealth. And I don't know how we can drill it into these people who are asleep any more than we can. But the reality is, when you have a debt-based system, when you have these bubbles built on debt, not actual wealth, they are doomed to fail at some point in the future. And then you can see right here, and this is really interesting, they stack it up, and Canada total risk score is 5.4. But if you look at some of the things it's tripping for banks, is liquid assets to total assets. It's also tripping on gross liability position in financial derivatives to capital percentage. That doesn't sound good. This sounds like exactly the same thing that caused the global financial crisis in the US, because that was all based off derivatives, and there is probably plenty of derivatives out there which are betting on Canadian mortgage outcomes, whether it's commercial mortgage outcomes or residential mortgage outcomes. It's been a massive cash cow for the banks to exploit this as much as possible. It goes on to say, we worry that the number of countries in the high risk categories scoring above 27 countries, is much higher now than the historical average. It's also close to the levels seen in early 2007 when it was 26. So again, that's not pointing to good times ahead. And the other thing that is really, really interesting about what's going on right now is the Bank of Canada is just totally asleep at the wheel. So are the banks. I mean, this bank economist put out this and they basically said, hey, the Bank of Canada might hike even more, which I don't even think matters at this stage. We're at such high interest rates now. The pain is just being turned up so much that it is literally just a matter of time. Rates can go up a little bit more. They are so high right now, they are crippling people. And they basically point to two reasons why the Bank of Canada isn't hiking right now, which is household debt is much higher than the US. Canada is handling wage and price pressures better. Are they? Because imports rose 13%. I mean, that's not really good, is it? That points to inflation coming later this year. So there's a bunch of different things that are making it look like it's not so rosy as the Bank of Canada is picturing things when it comes to inflation. And they really don't have a clue what they're doing. They're always behind the curve. They're always going to be too late. Just like they were too late with hiking interest rates, they'll be too late with cutting them as well. Relying on the Bank of Canada for anything is a fool's game, in my opinion. And then it also talks about basically commodities and everything else being priced in US dollars and the weakening loonie, which is a problem because that will increase inflationary pressures to Canada. And then it also talks about what I just said, which is about import prices, that they were up 13% in Q4 of 2022. And yes, the Canadian dollar declined by 5%, so that's definitely part of the problem. But it's still a major issue and it's still going to cause inflation. You know, no matter what's causing it, when prices are rising that quickly, it's still going to cause problems. What I want to take you back to is the yields have been spiking again. So the debt market is just not in a good place right now. We've got the 5-year, which is back up at 3.6%. The most popular mortgage products in Canada are based off this 5-year bond and also risk premiums and other factors. When this goes up, it does push mortgage rates up as well. And you can see clearly it's broke out of this trend. It was actually heading down. It even hit 2.8 and now we're back up within this short period of time. So the debt market, despite the Bank of Canada saying they're pausing, is actually going the opposite direction. And that is just the death cross. That is not what you want to see happen if you are a central bank. It just shows that you are completely out of control of what's happening. Obviously, we know that the Bank of Canada has no control over these markets. A lot of people believe that they do. If you look at this chart, does this tell you soft landing? Does this tell you, oh, everything's going to be okay? Do you think that you can sleep at night when you look at this chart, when you look at how much debt there is in the economy, when you stack that up and compare that to other countries, realize that you're 4th in the world? I mean, it is absolutely insane. You can't dial these things down. Sugarcoating things is the reason that we're in the mess that we're in right now. If people hadn't have done that in the mortgage industry, in the real estate industry, in the banking industry, in politics, we wouldn't be in such a gigantic mess that we're in today. And when you look at this, it's at 180% right now. Well, let's compare it to Portugal. What happened when Portugal got up to 125? I mean, and then 2008 hit and then it comes back down. You can expect the same thing to happen when this bubble goes down, which it will. And the fact is this what the yield curve is telling us? Because when you look at this yield curve right here, you can see it inverted right before the 2020 recession, which was very, very short. It inverted before 2008, again, not that much. It inverted before the dot-com bubble, again, not that much. But when you look at the banking crisis and the mortgage crisis that happened in the 80s, it inverted big time before that happened. And some markets went down 50%. 8% in real terms. So, you know, we could very much see that or worse come to Canada, because the reality is things are really, really bad. And, you know, when you're talking about a banking crisis, I think people have to be aware of the bail-in process, because I've really been researching this a lot over the past couple of months and seeing what happened in Cyprus previously. If you haven't seen, Cyprus had a bail-in and there was a lot of unintended consequences as a result of that. But essentially, you should definitely check out this website. Check out what is insured, what isn't insured. Just make sure you know what a bail-in is, because I do think that a bail-in could be used as a tool, as these politicians say, and it definitely could come. And if that happens, you've got to understand that lending will just absolutely collapse. So even though prices will be absolutely collapsing at that point, the banks will not want to lend a penny at that stage. A bail-in is a devastating event, and what that does for capital, it could flee the country. I mean, it could cause massive unintended consequences, because unlike Cyprus, Canada isn't on the euro, it's on its own currency. So it could really cause major problems. But Justin Trudeau, he doesn't understand even basic economics. And he's an authoritarian leader, and I could definitely see him using something like this, or pushing for something like this to happen in terms of a crisis. And when you're talking about the crisis, it's so large, it's bigger than the entire GDP of Canada. Can they even do a bailout? It's a legitimate question. It's something that I'm really diving into in my own time right now to try and figure out, is can they even do a bailout? And I don't know if they would, because it would just be so massive. They could collapse the entire currency, or at least send the value of the currency plummeting, which, like we discussed earlier, would then send inflation higher. So anyway, if you've enjoyed this video, you might like that video there. You might also like this video over here. I will see you in the next one, guys. Thank you so much for watching and supporting the channel, and I will see you down in the comments to speak to you there.